Folks, the Federal Reserve, as expected, is starting to send some pretty clear messages. I think it behooves all of us to pay attention. It behooves all of us to understand that there is some uncertainty, but I think, as you will see in a minute, higher for longer is certainly going to be the strategy as we enter 2025. I am reminded of the conversation with the Fed guy where we talked about the first half of 2025 being rocky, potentially being very painful for the stock market. And I add on to that my feelings about the real estate market. I certainly believe the first half of 2025 will continue to be a buyer's market. It will continue to be painful for first-time home buyers. It will be painful for real estate agents. It will be painful for mortgage brokers. But I want you to understand and really feel that it gets better from there. I do think, a la 1982, 2025 will be the last and probably most painful year. We still have some bad deals to unwind. We still have some bankruptcies to be had. But you've got to get through the pain to get to that rebirth, that regrowth. And, I think it starts with higher for longer. Because again, higher for longer hurts in so many expected and maybe unexpected ways. So we're going to run through just a series of Fed comments that I read over the last 48 hours. And, I want to ask you, what do you think this means? So we'll start with Jerome Powell, right? He's the president. What the heck is he saying? Well, the most meaningful thing I think he said in the last 48 hours, or again, I read in the last 48 hours, the Fed is not in a hurry to cut rates. He said that on Friday. And I think the 10-year responded. The 10-year now, I think, at or near 4.5. Remember, when all of this started, it was 3.6. Continuing on this path, we got Fed President Goolsbee. The Fed has to figure out why the 10-year is rising and then keep an eye on long rates. Remember, folks, the Federal Reserve and their, quote unquote, cutting rates, that's just overnight rates, really bank to bank. They don't control the long end unless they go back to quantitative easing. They become the biggest buyer, but there's no appetite or thought of that at the moment. The fact that long rates have gone up basically 100 basis points and the Fed has cut 75 basis points should be alarming and will have impact. And I think we will start to see some of that impact in the first half of 2025. How about Fed President Barkin? States that the control over the long end of the yield curve is not within our power. Basically, again, saying, hey, we can control the front end, think 2 years or less. They don't control the long end. Again, as I said earlier, unless they become the biggest buyers of 10-year notes. Not that we want them to do that, but I think it's disingenuous to not admit the reason we had 3% mortgage rates wasn't because of ZIRP. It was because the Fed decided to be the biggest buyer of 10-year notes. All right, let's keep going. How about Fed President Collins? Fed President Collins appears to be looking at the labor market. Said that the labor market doesn't need to soften further. I will remind you that the unemployment rate, I think at last bill was 4.3. I do think there are signs of cracks, as we have talked about many times, full-time, part-time, you know the drill. Don't forget revisions. Revisions are seemingly always one direction. Still on Fed President Collins. No big urgency to lower rates. Folks, again, remember, they are clearly telling us this rate cutting cycle is over, or at least almost over. Again, a lot of people were expecting 200, 250 basis points. It could be over at 75, perhaps 100, significantly less than many expected. Still with Fed President Collins, no signs of new inflation pressure. To which I remind Fed President Collins, CPI headline actually went up last week, frankly, went up from 2.4 to 2.6. Seems like inflation is back. Again, remember also when you went under the covers, every category that I saw was up X energy. I believe energy was down almost 5%, but everything else was up. It wasn't like we had a mishmash of positive and negative. Barkin, Fed President Barkin again. Hope. When was hope a strategy? I don't remember. Anyways, hope Q1 inflation numbers will come down. Now, remember our conversations with Dan Bird. We've looked at the base effect. We've looked at some of the numbers coming in after this month. So there's one more month of kind of small numbers, and then it gets easy. So again, it's very likely that we will see CPI numbers come in and frankly be below 2% April, May, quite possibly June. We'll go one more. Fed President Goolsbee again. There is dispute on the neutral rate. Could support slower cuts. Remember, we first talked about this with Michelle Bowman. At the time, Michelle Bowman was the only dissent. That was 2 meetings ago. She was the only one to dissent about the 50 basis point cut. She wanted a quarter. Her reasoning was the neutral rate was higher than her peers thought. What we have been seeing the last week or so with these Fed speeches is more and more people are, I think, starting to agree with Michelle Bowman, and that's important. If the neutral rate is 4 versus 3, aka less cuts, aka higher for longer. There are lots and lots of things coming. Next up, I want to shout out Renee. Renee is one of our school members. Renee has been working on something magical and powerful inside our school community. If you are on the desktop version, it doesn't work on mobile. It works on desktop. You now have the ability to put in your location. You now have the ability to see where other school members are. I think as of this morning, 10 or 15 of us, myself included, have added their location. Do me a favor. Do not put in your home address. That would be silly and not advised. But pick a Starbucks, pick a McDonald's. If you actually look at my location, it's a local casino that's relatively close to my house. So again, put in your location. Why? I want to just show the people in school, all the people in the community where they are, so you can create local meetups. You can look for referrals, because again, one of the things you need to do is understand who's doing it in your backyard. I think that functionality that Renee unlocked for all of us is amazing, and we owe him a debt of gratitude. If you don't know how to use it, you can just go to the school community, and I have a pinned post. There's a pinned post with a 3-minute video showing you how to add your location. And if you want, also after you add your location, you can add an event. So again, shout out to Renee. Very powerful. Again, such a go-giver. Thank you. To that end, we've got 2 more people that have joined school in the last 48 hours. I want to shout out Patrick. And I'm actually excited by this second one, Jason Pritchard. Folks, Jason Pritchard, as you know, has been on this channel for years. He is on my Mount Rushmore of real estate investors, and he has now joined school. Jason Pritchard last week gave us 3 videos that you can unlock at level 2, but a lot of you have questions for Jason Pritchard. He is now in school. You can put in posts and copy him. You can direct message him, whatever you would like. Jason Pritchard is now in school, and we are so lucky to have him. Let's talk about next week. We got a lot of economic numbers to watch. We've got a lot more Fed speeches. Again, I think Fed speeches are going to be wild the next week or so. Let's just count the Fed speeches. 1, 2, 4, 7, 8. There are at least 8 Fed speeches next week that I've tracked. At least 1 every day, with Thursday being the big day. There are 3 on Thursday. So Monday, home builder confidence. I don't know about you, but I expect home builder confidence to go down. Again, as we have seen rates go from 6 to 7, I would think home builders are less confident. 2, on Tuesday, housing starts and building permits. Guess what? I expect housing starts to go down and permits to go down. This is part of my thought process for the first half of the year being painful. We could see such a draw or drag on the economy from lack of home building that there is more slack in the workforce. Again, it is hard to get construction loans below 9 or 10%. They're variable, they move. It's not likely. So again, expect housing starts to go down. Wednesday, we will get mortgage demand. Again, expect it to be down. Thursday, we get weekly jobless claims. Again, we are just bouncing around 220. We're going to just keep watching it each and every week. We get existing home sales. I actually think existing home sales will be up. How can that be? Well, the folks that closed last month had mortgage rates at 6% or thereabouts. We will not see the impact of 7% mortgage rates until next month. So again, I expect existing home sales to be up and probably shock a lot of people. And then Thursday, we also get leading economic indicators, understand what is going on across the economy. And then Friday, we will get consumer sentiment. Consumer sentiment obviously is important because consumers are the economy. I do want to highlight that our Vegas event, February 15th and 16th, is nearly 50% sold out. Seems like a lot of you waited to buy your tickets until the last week or so. So again, if you have plans to come to the Vegas event, you can go to Eventbrite and buy your tickets. It would be a shame if you missed out. But yes, in the last week or so, definitely a lot more people are buying their tickets, getting their flights, hotels. So it is time to buy your tickets. General admission, VIP. VIP is more than half sold out. General admission, almost half sold out. So again, put those together, half sold out. So again, time to buy your tickets. Don't miss out. You will regret it. We've put out the speakers. We've talked about them. The event. You will want to be there. Let's talk about the housing shift that I see coming for builders in the first half of 2025. Again, we've talked about rates going up, rates being higher for longer. What does that mean? As we said in the housing starts and building permits, those will go down, just frankly go down. That will likely fall into the summer. My question to myself is, will it be enough to impact the labor market? It could. Will it be enough to cause lumber curtailments, as the uneducated economist talks about? It could. Again, I am starting to see similarities between 2025 and 1982. You can go to the 54-year spreadsheet and really look what happened in 1982. It, of course, will not be the same, but I am proposing it will rhyme and have many similarities. Let's congratulate some people for doing the work. Jeremy, congratulations for getting your golden ticket. Again, getting your first deal is amazing. This will go out in the mail. It will be in the mail today, but it will go tomorrow because it is Sunday. And then Mark actually wrote his first offer. And this should be a purple card, but we are doing some remodeling at the house, and I can't find my purple cards. So worst case, I'll wait till I get in Vegas. But again, purple card. This should be a purple card for writing your first offer and not dying. Again, it's not that you got the deal. It's that you broke down and wrote your first offer. Again, this should be a purple card. I couldn't find them. I thought they were in my office. They're not. But again, Mark, congratulations for getting your first deal. You will get a purple card, even if I have to wait till I'm back in Vegas where I know I have some. So again, Jeremy, Mark, congratulations. We did have some other economic numbers on Friday that I'd be remiss if we didn't talk about. Retail sales. Again, as an economy driven by retail sales, they were up more than expected. Top line, they were expected to be up 0.3. They were up 0.4. However, if you remove autos, retail sales were down worse than expected. Again, expected to be up 0.3. They were actually only up 0.1. Interesting, though, on the revisions. The September revisions were quite positive. Again, they were reported at 0.4. They were raised to 0.8. That is a significant revision. Ex autos, went from 0.7 to 1.2, which is a gigantic monthly jump. Not to be outdone, we had New York Manufacturing Survey, which last month printed a horrible negative number of 11.9. It was expected to go to 0. It reported a blowout number, highest in 3 years, came in at 31.2%. So again, lots and lots of stuff looking to be a little bit better than expected. And then finally, I want to shout out a TikTok trend that I can get behind. It is called the winter arc. Okay, what is it? The winter arc is basically starting your New Year's resolution now. So whether that's a health journey, reading books, better relationships, financials, budgeting, whatever it is, don't wait till January 1st. Start now. It takes, I've heard, anywhere between 71 and 90 days to produce a habit. So if you start now, you could very much have a habit formed in early 2025. And again, if you're interested in real estate investing, the best thing to do is join school. We are continuing to add functionality and value. I hope to see you in there. Of course, join us in Vegas. Again, we're now half sold out. Don't miss out. Don't miss out. And at the end of the day, folks, just keep being amazing. Keep being positive. Keep making people smile. Keep working to improve and be just 1% better each day. I believe in you. I hope you have an amazing Sunday. Like, subscribe, comment. Until tomorrow, this is the Daily Financial News. Take care.